Good afternoon and welcome back to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me all the way from San Diego, California is my good friend Bob Lang. He's the founder and Chief Options Strategist over at Explosive Options. Thank you very much for joining us.
Always great to be with you,
MarketSite, and welcome back to New York City.
Thank you, Jill.
So let's get right into it. It's no secret that the volatility landscape is much different in 2018 than it is in 2017.
For sure.
What does that tell you about the overall market, and what are some clues you're getting from the options market for your trading strategies?
Well, from the options market, we're seeing a lot of people trying to protect their portfolios by buying volatility and buying some puts, and which is also a normal thing that people should be doing with their portfolios as a regular strategy, right? But what we found in 2018 is, especially in February when we saw that big explosion in volatility, we saw a lot of short volatility people getting taken out to the woodshed. What ended up happening is people started putting on more protection and keeping volatility elevated because of all this uncertainty that's going on. We have a lot of news that hits with tweets. We see with a lot of global uncertainty going on right now. Perhaps the Fed is maybe going to raise rates a little bit more than people anticipate. All these little uncertainties right now, we know that market players don't like uncertainty, and that's when they start reaching for protection. And we get a lot of these gyrations where the volatility rises, and we see markets going up 600-700 points a day.
Right. Well, even on the downside, too, you have the disparity of 400, 500, 600 points. And with that said, the VIX is trading around 20-ish, which is its historical norm. 2017 was an anomaly. It wasn't how typical markets function, but traders have really been begging for vol, right, since the second quarter of 2016. Now they have it.
Yes.
Do you think they've been thrown off guard at all?
I absolutely, I really do. And I think that all the complacency that we saw in 2017 has come home to hurt a lot of these short volatility players. And these short volatility players, generally speaking, they're long the market, right? They're long the market and they're short volatility. That trade started to unwind in February, and we're seeing a lot of that people just shying away from that particular trade now. So we don't see the same type of trades coming on in 2017. From 2017 as we do currently right now in 2018.
So what's going to be your approach going into first quarter earnings, and talk about some strategies that are underutilized by traders?
Well, we know that the analysts are expecting quite a large gain in earnings for this quarter and the next quarter. I think something 18-19%, and then upwards about 20% for the following quarter. So this year is looking really robust for earnings. I think what we need to pay attention to, Jill, is the reaction to stocks and reaction to these companies after the earnings come out. Like, for instance, today, we saw really good earnings from Citigroup and JP Morgan, and we would have probably expected those stocks to be up. But I think right now what they're doing is they're reacting to other factors such as the flattening of the yield curve, and we saw the 2-year yield going up to levels we hadn't seen in several years, and we see that the yield curve between the 2s and the 10s spread started to narrow one more time. It just continues to narrow, and once that narrows, it's bad for banks going forward. So this earnings report that, for instance, the JP Morgan and Citigroup had is reflecting a good environment for the past 2 or 3 quarters, not reflecting what's happening going forward.
Well, when you are educating options traders, you always tell them price action is the most important indicator. Elaborate on that.
Number one indicator is I look at price action. We can look at all these other indicators like the MACD. I'm a technician. I would look at MACD, look at relative strength, rate of change, that sort of stuff. The only thing that really matters is the price action. If the price action is falling and all the other indicators are lining up, say, bullish, I got to pay attention to the price. And that's really what's important right here. The price and the volume as well. Put them together, and they give you the best picture that you could possibly have.
All right, let's go back to, and I'll wrap up with this on education. There's a number of trading services out there. Anyone with a Twitter handle can proclaim to be a trading guru, and there's a generation of traders out there who have never traded a volatile market, right?
Right.
And in the same token, there's also a number of older school folks who have not evolved with the way markets are trading in 2018. So how do you spot bad advice?
It's very difficult, because especially when markets start to get volatile, and we've been in a comfort zone and been very complacent for a while, like in 2017. We tend to get a little bit lost in trying to figure out where markets are going to be headed. Obviously, the goal is trying to figure out what the future is going to happen. And listen, I used to have a crystal ball, and I always tell everybody my daughter broke it when she was really little.
Yeah.
But so I don't have a crystal ball. I can't figure out what's happening into the future. We just go with trends. We just go with momentum and figure out what's happening. Now, as far as bad advice, you just have to kind of pluck and take everything that you possibly can, test it if you can. As explosive options, what we try to do is we try to put out a lot of information for people, good information, and hopefully we're able to get it right more often than we get it wrong. And we're not afraid to admit we're wrong.
Right.
And that's the thing. Is anybody out there who comes out there and says, you know what, I never get it wrong, or else they just sweep their losers under the rug and forget about it.
Or they seem to pick their tops when they're shorting stocks just arbitrarily.
Absolutely.
Time stamping, we have seen it all when it comes to financial.
Tops and bottoms are a loser's game, as far as I'm concerned. Let's just ride the trends, whether they're up or down, doesn't matter.
All right. Well, thank you very much for joining me at MarketSite.
Great to be with you, Jill.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.